With the latest grain stocks report showing an abundant supply, some farmers may be wondering if they missed an opportunity to sell some grain at better prices. In this morning's analysis, Farm Director Al Pell finds out you never know when opportunities will arise.
Here at Ag Day at the Agribusiness Desk, we're talking to Brian Daugherty and Stuart Peterson. Brian, one of the things that producers, farmers know, and that is that all opportunities aren't available all the time. So you really kind of have to sort sometimes, don't you?
Well, sometimes you got to look. You got to work at it. You know, in the grain industry, the last half a decade especially, we've had a lot of volatility. All of a sudden in 2013, late 13 and now 14, it looks like we've got ample inventory, or at least enough for a while. Prices, if you've noticed, the trading ranges are smaller than we've seen. Volume on any given day may be light. And that could be a trend of things to come. So as we talk to producers, sometimes we hear them say, well, geez, there's just no real opportunities here. I just don't know what to do. Well, let's look for that. We can look at strategizing, and there's some risk with this, but doing things like selling call options above the market. So if you've got grain in storage, you're challenging the market to go higher. Otherwise, you're collecting premium. That's an opportunity.
A couple of years ago, you could just put it in the bin and wait, and you made money. But you can't always do that.
That's going to be more of a challenge this year. Now things change, and it's easy to be bearish when prices are low. But there's a pretty compelling argument that there's not a real strong reason for end users to just bust down the door and buy every bushel they can buy right now. So they're going to go in a hand-to-mouth situation. So we like selling call options. When it looks like the seasonal low for corn may be in place, sell put options below the market. You could even do both and pit those against each other. So what you're trying to do is extract time value out of the market, and that works well in a market that's range bound, which it looks like corn might be for some time.
So really you need to look at that opportunity, and when you're talking about that, you're talking about 215 or 214 prices in order to be able to determine what you need to be doing.
You certainly can look out there. You can go longer term. When we sell options, a lot of times we'll look out 3, maybe 4, 5, 6 months, try and get in that 90 to 120 day window when time erosion begins to pick up its pace. Thereby, those who sell options will notice that the option values decrease in their favor. So that's what we're looking for. But it wouldn't be unusual to see these markets just go flatline for a while, and that happens when you have bigger crop years like we've had this year.
And take advantage of the basis when it's favorable.
Absolutely.
Okay, thank you very much. Brian Daugherty, our guest here at Ag Day. Back more in a moment.
To discuss marketing strategies, call 800-334-9779 or visit stuartpeterson.com. Ag Day, brought to you by Broad Spectrum Prosaro Fungicide from Bayer. Growing wheat with Prosaro, it's like growing money.